sale and purchase agreements, the commercial issues. Good afternoon. I'd like to welcome you to Redcliffe's online training program dealing with the sale and purchase of agreements as they relate to private companies rather than public companies. The course is not really one focusing on all the minutiae of drafting what we call the stat in general, but focuses on the commercial issues and the commercial clauses. That is to say, those that really make a difference to the principles. This is a one-day program split over 2 half-day sessions, although it can be offered as one continuous day if clients prefer that. The course assumes or is based on English law, but does deal with the key differences as they relate to civil jurisdictions. I've been doing M&A and SP&As for over 40 years, and certainly when I started, and I've also done them across every major jurisdiction with the possible exception of South America. But certainly when I started, the documents in civil jurisdictions were comparatively thin compared to English documents, which sort of sat in the middle, with US documentation being slightly more voluminous. Globalization really has meant we've seen a massive convergence, certainly in Europe, in terms of the way these documents are set out and structured, although there are differences between civil and English systems. A good example would be the way contracts are interpreted. So, for example, English law takes a very academic approach. They look at the 4 quarters of the document, and the wording is applied in line with Arnold v. Britain judgment. That's what you've agreed. If the wording is clear and unambiguous, that's what you get. In contrast, civil jurisdictions pay some, obviously, attention to the wording and the meaning of the words, but a far greater emphasis is placed on the intention of the parties. What do they expect from each other and what is fair and reasonable, in line, if you like, with probably a good example of this approach would be the Haveltext principles set out in a Dutch case, the Lundeform case. And you can see there that, the court said, what could the parties reasonably have understood the provision to mean? What do they expect from each other? I will go into some greater level of detail as we go through the course. There are some nuances, and certainly my view is that the difference between those 2 civil and English law approaches are not as great as you would imagine. In terms of other differences, there would be relating to, for example, English law has now set out the disclosure standard, which doesn't really apply in civil jurisdictions. So civil jurisdictions use what is fair and reasonable, fair disclosure. English law now, in the light of a recent case, really focuses on the different disclosure standards which you can set out in the document. And then English law also has a rather weird approach to the way that warranty claims actually, or the damages are calculated under warranty claims. Obviously in the SP&A, one of the key clauses is going to be the purchase price. And the purchase price in most deals are normally based on cash-free, debt-free with a working capital adjustment. Or in the case of real estate and certain other industries, it's based on the delta, that is to say the difference in terms of net asset value. If you look at the general wording that appears in many sort of contracts relating to what is cash, what is debt, and what is working capital, it becomes readily apparent that these definitions fail dramatically to capture the nuances in terms of what is cash and particularly what is debt and working capital. And so I spent a fair bit of time in the course talking about and giving guidance on what should be included, how to approach that, and also make sure that the wording is used in terms of ensuring that this minimizes disputes at a later stage. Similar considerations apply to the net asset value. And you can see here, effectively, I said a very diagrammatic approach. Many lawyers obviously are not that used to the accounting, but this sort of diagram here shows you that your net debt is a function of the cash and cash equivalents, if you like, and debt. And then the working capital is your current liabilities. Obviously, we also have to deal with the CapEx, and I explain how to deal with that. And then you have your NAV that deals in turn with banks, insurance, and real estate. That's not strictly speaking true for banks. They tend to use the regulatory capital, but I'm using that as a bit of a proxy. So when we sort of look at how the purchase price is arrived at, there are obviously 2 different ways one can approach this. One is the conventional historical method, completion accounts. Other is lockbox. Now, again, when one starts drilling out to this, starting to look at completion accounts, One, what do the accounts actually mean? And this really is another major aspect that one has to focus on because, for example, EBITDA, yes, it isn't that widely used in SPNAs apart from maybe earnouts, but it's not an IFRS term. It's not a US GAAP term. And so when one talks about the accounts, which ones do we mean? Do we mean the statutory accounts? Do we mean the management accounts? Or do we mean the accounts as set out on the reference date balance sheet? Or do we mean a composite of them? So I spent a bit of time talking about how to approach this, and I'm looking at it from both the buyer and the seller's perspective. Similar considerations apply actually in lockbox, but again, one has to be very careful about that because with lockbox, one is starting lower down the equation, if you like. In other words, the lockbox figure assumes you've already decided what the cash and debt free is. Having said that, that does not relieve the drafting parties from having to make sure that they get what they say they get. You don't obviously have, with lockbox, the ability to claw back when you have your completion accounts adjustments. So that needs to be dealt with. So that is a key issue. Lockbox, though, has other issues on dealing with permitted leakage. What does that mean? How do you deal with it? And also the value leakage. There's often a difference between the public and the private way of looking at it. We then sort of the course then turns to focus on the sort of interrelated issues, if you like, of reps, warranties, disclosure, which dovetails with the warranties, and indeed indemnities. Obviously, one of the key issues of limiting liability is that if items are adequately disclosed, then effectively the warranties no longer apply, and how one starts to deal with those sort of various issues. So I talk about all of those sort of issues, and I come at it from both the buyer and the seller's part. What is seller friendly? What is buyer friendly? What are some of the sort of things to look out for? And while this is obviously very useful for lawyers, I think for the way the market is moving, it is important to senior practitioners in corporate finance or advisory to understand these kinds of nuances so that when the discussion is going on between the lawyers, they can actually understand the legal points that are being made. And then the final sort of section moves on to split exchange and completion. So the key issues there are going to be obviously the rain dance about the warranties. Are they required to be repeated at closing? That then raises the issue where the seller says, oh, well, if I have to repeat the warranties, then I want to update my disclosure. And then the buyer says, oh, well, if you do that and there's something material that arises, can I cancel the contract or walk away? So there's a bit of a rain dance about what, and again, I'll present that as to what level of warranties ought to be repeated, how you deal with that, how that dovetails with disclosure. Do you make disclosure on everything, or can you update disclosure on new issues? And then finally, what about MAC clauses? These have historically not been that widely featured in SPNAs in Europe, but I think we've certainly seen a lot more traction of those. And they do seem to be making their way into these agreements. So I talk again about what should they really cover from the buyer and seller's perspective, how do you deal with that, when can you sort of walk away. So the course is really a deep dive into these sort of issues and looking at it from the legal aspects, but also a very commercial aspect in terms of what the parties can come to expect from each other. I look forward to welcoming you on this course and hope to see you there. Thank you very much indeed.